Hi, everyone. I'm Ben Sweat, the managing editor of the Senior Care Investor, and today I am joined by Brian Lockard, the executive managing director and U.S. healthcare and alternative real estate lead at JLL's Value and Risk Advisory team. And Brian's reward after months of hard work putting together their annual Seniors Housing and Care Investor Survey and Trends Outlook report, which came out last week, is to talk to me about the results. So, Brian, I'm honored that you gave me the time. And would you mind just first kind of giving me an overview of the process of putting this report together?
Sure. Yeah. First, thanks, Ben. Thanks for having me on again. Always look forward to chatting with you regarding the survey. It's a survey that we've put on for about 10 years now. And it takes us a couple months to put together. I work on it with my research team. We interview or survey about 100 folks. And typically we get back 70 to 90 responses. And it's generally the same 100 market participants. And these are folks that are, brokers, debt brokers, buyers, investors, developers. These are folks that are living and breathing in the space and actually buying and selling these assets. So, we think it's one of the best ways to keep our finger on the pulse of, dynamic market, especially over the last year or so.
Well, you're giving the market some extra data points on how fast valuations are moving these days. That's always valuable too, and much appreciated.
Yep.
All right. Well, I'm going to ask you the same thing I asked you last year, but was there anything that shocked you in the results?
Yeah, I don't know if anything shocked me really. The one thing that I will say is, I was happy to see the results that obviously cap rates came down, spoiler alert, but we surveyed folks in probably January or February, and I felt like late last year we already saw a pretty big compression for cap rates and a market shift. It was palpable. You could feel it last
Yeah.
year when it happened. And I know my team certainly felt it. And we struggled to keep up with where cap rates went. And so I guess the one thing that surprised me is that 85% of participants feel that cap rates are going to compress further in the next 12 months. So,
Mhm.
where they're going to go, I don't know, but that's a 30% increase of what thought cap rates were going to decrease last year. So to me, it just speaks to the overall long-term fundamentals of the industry.
Yeah. Well, looking at that result, do you think cap rates are going to fall faster than interest rates in 2026?
You know, I do, but I'm somewhat tempered there. I don't know if it's a function of cap rates or if it's more a function of where interest rates are going to go. I think with what we're seeing, there's some pretty big macroeconomic issues out there that, may cause interest rates to kind of not fall as much as we were hoping, inflation being one of them. So, yes, I do, but, by how much, I don't know.
Yeah. Well, do you think further cap rate compression is going to come more from falling interest rates or more from buyer demand or even falling kind of perceived risk levels of investing in seniors housing?
Yeah, I mean, I think it's buyer demand. I think there's new entrants coming to the space. I think our little seniors housing space that not anybody knew about is becoming more and more apparent. You see us on CNBC. People are talking about it. Everybody knows the demographics. Occupancy is trending up. Margins are better than ever. So I think that's going to largely drive what we see.
Yeah. Well, with that major buyer demand, do you think that we're going to surpass last year's transaction volume, which was already at a record?
Um, I mean, I hope so. And assuming nothing catastrophic happens, I believe so. We saw last year. You mentioned. I mean, it was a huge year for us. I think it was almost 50% more than the previous year, and almost an all-time record. Maybe second or third. I'm not sure, but if all goes well, I hope 2026 does set the record. So
Yeah. Well, I mean, we know the buyers are out there, but there have to be willing sellers. So I imagine with rising valuations, falling cap rates, that more sellers just will naturally be tempted off the sidelines in
um,
2026.
yeah, I think so. I mean, I think there's a lot of people out there that have held for a long time.
Yeah.
And we're starting to see good cap rate deals, good high per bed per unit values. So I think a lot of those folks that had their 5 year strategy and they're in year seven are probably going to start selling.
Yeah. And perhaps a few new record per unit prices. I mean, we already broke some records at the end of last year.
I've heard some rumblings out there.
Well, that'll be fun to write about, certainly. Well, what buyer types do you think are going to expand their share of acquisitions in seniors housing?
Yeah, I mean, I had a hard time thinking about that. And, mostly I just feel like we're very balanced right now. If you look at last year, it was a good balanced year. We had REITs, we had core buyers, we had private capital. I think it's going to be another balanced year with
Mhm.
everybody chasing those demographic trends, high occupancies, stable margins, the ability to acquire these properties or, for the time being at below replacement cost levels. If I was guessing, maybe an active year for REITs again, and then private capital, I think will obviously play a big part.
Yeah, I mean, perhaps some competitiveness among the REITs after seeing what Welltower's done the last 5 years.
Yeah,
There's some catching up to do.
yeah. I didn't want to say the name Welltower, but there's certainly the elephant in the room. They've been gobbling up quite a bit.
Yeah. Well, another kind of consensus across the industry and in the survey is that occupancy is just going to keep going up and up and up across seniors housing. So the my next question is a little vague and perhaps tough to answer, but how high do you think average national census just could go in the next few years? Could we hit
Yeah, yeah.
100%?
You know, it feels like a little bit of a trick question, but I know that we've gone on what 19, 20 quarters of consecutive occupancy increases. We reached, I think, 90% in both primary and secondary markets in the last quarter. So, how high? I don't know, but I do know that I'm still not seeing a whole lot of new construction. We're seeing some rumblings of it, right? Doing some market studies for new construction, doing a few appraisals here and there, but certainly not at pre-COVID levels. So, the new supply is not going to stop and offset some of that supply or demand imbalance.
Yeah.
If I was guessing, I don't think 100%, right? Frictional vacancy levels would be insane and very difficult to maintain. So, if I was
Mhm.
guessing, I would say, mid 90s, low 90s. I think it's going to start to flatten here.
Yeah. You can see a couple of the trend lines starting to flatten in Nick's kind of latest report. So
Yeah, yeah, makes
we'll see
sense.
about that. But I mean, after what the industry's been through the last decade plus, you know, not bad to reach mid 90s.
Yeah, I'll take it.
Yeah. Well, in the report, you saw the largest year-over-year declines in the cap rates and in unlevered IRR in the independent living sector. Why do you think that was?
Yeah, I mean, I think it's a couple things, right? Like, independent living, we had quite a few new entrants in the space. And if you look at it from a knowledge standpoint, independent living is pretty similar to multifamily, right? Like it just doesn't have quite of the operational component that assisted memory care or certainly skilled has. So I think it's the easiest to understand. I also think it's one of the first sectors to feel the full impact of baby boomers, right? We're seeing large portfolios with high occupancy, stables margins, and that's what investors are chasing. And I just think the long term fundamentals for independent living just look great.
Yeah. Well, and you saw in the survey results also that more investors are going to be targeting that sector than compared to last year. I think um, the share of your respondents saying that independent living was the biggest investment opportunity went from 19% in Q4 of 2024 to 29% this year. Assisted living remained the plurality at around 40% of respondents. But according to you, which sector do you think will see the biggest jump in average price in 2026, perhaps driven by that buyer interest?
Yeah. I thought that was a really interesting data point, right? I mean, assisted living, it makes sense. It's need driven. It's the safe
Yep.
answer. You can go there. It's always going to have a place. But
And the
independent
kind of rent
living,
increases that you can push in assisted living right now is just
yeah. I
higher.
mean, well, yeah, I would agree. I think both of them, right? I mean, we've gone through several years of really strong rate increases, and still positive absorption. So,
Yeah.
that speaks to the overall health of the market. But, if I'm looking at just that data point and where cap rates have gone, I think independent living is probably going to have the biggest jump, right? We're going to see more people jump in, more people creates more competition, lower cap rates drives higher values. So, for me, I think it's going to be an independent living.
And IL may have gotten a reprieve just from the lack of new construction because they're not seeing as much competition from active adult in the last few years, even though construction levels for active adult are still probably higher than the other seniors housing sectors.
Yeah, I mean that's a relatively new sector, right? But I would say it's slowed down. But still, there's always that acuity. I don't know how often it happens, but I feel like there's always that acuity shift, right? Where yesterday's assisted living is today's independent living, and now it's yesterday's independent living is today's active adult or whatever. So
Oh
it's
yeah,
kind of
I
interesting
mean,
to watch.
active adult 10 years from now, who knows? They could be bringing in all kinds of home health services, maybe
Yeah,
dining. You'll see communities being built with the just kind of the footprint for potential dining room and kitchen in the future.
that's right. So they can quickly convert as needed when that population ages in place.
Yeah. Well, I'll be following that closely. All right, and then to the question of what is the top concern that could negatively impact seniors housing in 2026, the top responses were negative changes to the economic environment and the availability of workforce. Those are the top two. What's another concern of yours? I imagine you agree with those top two.
I definitely agree with those two. For me, and maybe a little bit of dance around the question here, but I think it's uncertainty and unpredictability.
Mhm.
And with that, where interest rates go, it's just it's a difficult environment to operate in. It's so dynamic and fast moving that if investors can't predict where we're going, it requires them to be nimble, or ready to pivot. And I just think that's a challenge.
Yeah, no, that's a good point. My last question is there a risk of cap rates perhaps falling too much, in your opinion?
No, I mean, I don't know. I mean, I'm all for low cap rates, right? It's certainly better than high cap rates. But I guess if I had to stretch, I would say negative coverage or negative leverage could be a concern.
Yeah.
That spread with multifamily getting too tight, that could also be a concern. I mean, we know seniors housing has the business component, a little bit more risk there. And then I guess long term or mid to long term would be exit strategies. If we get too low, what are we going to exit at, right? And so
Yeah.
maybe that's a concern. But overall, I think it speaks to the optimism of the industry, and I would just say no real concern for the downside.
All right. At least in the immediate future.
Yeah, not this year.
Yeah. Well, I'll end with one last question that I'm going to spring on you now. But Nick is next week from when we're recording this. What do you think is going to be the kind of driving topic of conversation at Nick?
Um, I think it's going to be low cap rates, high values, and I hope new construction. I think those are things that I would love to hear, but I'm not. You know, I guess we'll remain to see.
Well, given the work you do, I'll be looking to you for any of those signs of new construction coming back. So I hope I'm the first to hear it.
Yep, you will be.
All right, good. Well, Brian, I appreciate the time, and everyone should go check out JLL's investor survey, and it's got some results that may be very meaningful for anyone planning 2026 acquisitions. So I appreciate the time, and we'll do it again next year, of course.
Sounds good. Thanks, Ben. Appreciate it.
Thanks, Brian.
Bye.